To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, the freshest guy in the business, AJ Brown. Good morning, sir.
Hey, good morning, Sip.
We were just talking right before we went live about, well, first your shirt, right? Because
I got the fire shirt on.
Because the markets are on fire, right?
The markets are on fire. And so this has a double meaning. So if you're a buy and hold investor, you're on fire because your house is burning down. But if you're an options trader and you're figuring out how to be on the correct side of the equation, you're on fire in a good way.
And using your strategies, we've had some pretty hefty activity. We were just talking about the ratio, the amount of put contracts and call contracts that were traded was at a record level on Friday. And so, break that down a little bit for any new traders that might not really understand how important that actually is.
Well, let me back it up just a little bit. So I'm going to this ratio that we keep track of called the put-call ratio. And if I pull up this little chart here, what you're going to see once this chart loads is that the put-call ratio just the other day was the highest it's been. I can go back, 3 years. And the only time it was higher was right at the beginning of the pandemic. So what does that mean? It means the ratio of puts traded versus the ratio of calls traded. And so if that number is above 1, that means that the overall sentiment is bearish, right? Because there's more puts than calls. If it's under 1, it's bullish. Now, there's an overall, when it comes to options trading, an overall kind of negative sentiment. And that's because most traders out there are buying stocks and then they're protecting them with puts. So we see a lot of activity on the puts. But so let me throw this out here. The CBOE, that's the Chicago Board of Options Exchange, every day records a couple of different variables, Sip. They record the index put call ratio. They record the equity put call ratio, and just recently, and when I say recently, in the last 10 years, the ETF put call ratio. And I follow these things because the index traders tend to be the big money traders, right? The folks that are managing hedge funds and mutual funds. And it's really interesting to follow this because it almost seems like the index put call ratio seems to lead, like they know something ahead of what the market knows. They've, got these high paid analysts and they make projections. Whereas the equity put call ratio, these are usually like folks just trading individual stocks, usually the more retail type investor, they tend to be lagging. And so I like to follow these put call ratios because if I see that the index put call ratio starts to go either bullish or bearish, I know that something's coming up. And when the equity put call ratio tends to go bullish or bearish, it tends to mean that something that came up is now kind of finishing up because the equity traders seem to always be behind the ball. So all to say, yes, it was pretty negative last week, or even just a couple of days ago. But last week it was pretty negative. And both the index traders and the equity traders were buying a lot of puts to hedge their long investments. And it's something you can keep track of.
Yeah, and the market's kind of still been moving to the downside since that Fed number. And the way that I like to look at it is like insurance contracts, right? Like more people are taking out insurance. That's why there's more activity in the options market. And when you implement some of your strategies, that's kind of the name of the game. And so we're at these lows and we might be breaking down to the downside for the year, right? Like we're back in that bear. Are we in a bear market chatter?
Oh, absolutely. Well, as far as we're concerned, we like to use these retracements. And the first retracement that we got was right here, this guy. And that was the first retracement that hinted to us that, hey, we're not going up anymore, we're going down. Now, this thing has only solidified that sentiment. This move down that we haven't quite found a bottom yet to. Although, if you look at my indicators here, they're indicating that perhaps a bottom is coming in the next couple of days, although they have been wrong before, but they're giving me the activity that says perhaps a bottom has been found. This is clearly a down move. What I'd like to see to really buy into this downtrend is another kind of up move for a little bit and then another down move. If I see that, even just the up move and then a top and moving down, I'm full on going to call this a full on bear market, not just calling it neutral bearish, but full on bearish. But back to your topic about puts. What is a put? A put is an agreement with someone where if I sell you a put, I'm agreeing to buy your stock at a certain price anytime between now and when our agreement expires. So if you think about that, the person who buys that agreement from me wants the stock prices to go down, because if the stock prices go down, say our agreement is for $100. I'll buy your stock for $100 if you buy this agreement from me. So you pay me a little bit of money, and now I'm obligated to buy your stock at $100. So they want their stock to go down to 90 or 80 or even lower, because if they buy it at the retail price of 80 and then force me to then buy, or to buy their stock from them, they bought it at 80, and then when they sell it, I have to buy it at 100. They're going to make money. So buying puts makes the market, it's a down trending strategy. It's what you do when things are going down. In fact, the price of the put, if there's an expectation that the price of the stock is going to drop, the price of the put, that agreement that I'm selling to you where I agree to buy something at a loss, is going to go up in price. So puts behave opposite of the market. So yeah, a lot of people are buying puts because they're trading the down market. We're also seeing a lot of people shorting stocks, right? What is shorting a stock? Shorting a stock is where you borrow some stock shares from your broker. Your broker has to keep stock shares in their bank vault because otherwise they're not considered a broker. They have to have a certain number of shares just in holding. So they'll lend them out, and I'll borrow some of my broker's stock, sell it, hopefully at a high price, and then I'll wait for it to drop. I'll buy it back at a low price, give it back to my broker, and keep the difference between where I sold it at that high price and where I bought it back at that low price. So we're seeing a lot of that too, and it kind of creates this downward spiral of pushing the market down.
Yeah, and that's the beauty of, investing in trading. We do have some questions coming in. I don't know, did you want to run through the VIX real quick? It's kind of
Sure.
going to be similar to the put call ratios, but we are kind of getting up to those levels, that support level there.
And a lot of people don't understand kind of what this VIX means, Sip, but the VIX is a measurement of uncertainty, right? It's a measure of fear. And so the VIX, as you can see, continues to go high. In fact, if I kind of go out in time here, we're coming towards, again, this is a 2-year chart. We're coming towards kind of the highs that we saw at the beginning of the pandemic right now. And so people are uncertain. People are afraid. Now, tangibly, what does that mean? It means that the price of options is going up because there's a lot of demand, because options are considered insurance policies, right? If I own stock and I'm worried about that stock price dropping, I'm going to buy a lot of puts, which is what we've been seeing. And so if you're selling puts and you're buying puts, if the buyers outnumber the sellers, the price goes up. It's supply and demand, economics 101, and that's what we're seeing. We're seeing the price of options going at a great price, much higher than usual. And for us, SIP, we sell premium, we sell the options. And so this is a great opportunity for anybody who's selling options, because you're on the correct side of the equation right now, because the buyers are outnumbering the sellers.
Yeah, and the market's heading down, the VIX is going up, and that's why some of your strategies are good for this. So I do want to ask this one question. There's a question that's come in that I think is might be able to play on what you just said there. This one's from Brian, and he's asking, is there any advantage in purchasing stocks that have monthly dividends when used for covered calls?
So now you're getting into kind of some fundamentals analysis, and this is good because a lot of companies out there that are public, especially in the tech world or in the new IPO world, they haven't figured out how to run their business at a profit, right? They haven't been able to figure out how to get cash flow coming in. And for some reason, especially when times are good, when there's a lot of money flowing, it doesn't matter if they make a profit or not, so long as investors are interested in and keep funding them. But as soon as times get a little bit tight, that profit thing matters. And so what you see is a lot of those companies who never were able to show a profit, they start to lose their asset value as investors flee. Companies that have been tried and true for a long time, and in our membership site, SIP, we talked about some of those like Conagra, a Ford, a GM, some of these different stocks that have been around forever. Conagra is in the food business. They show a consistent profit. In fact, I think it's let me just what is it? CNGA, I think. Conagra. I'm drawing a blank here on the ticker, but I'll find out.
See if I could find it.
Conagra brand. It's Conagra Brands, and the ticker symbol is CAG. So let's take a look at CAG really quick. So you can see here they give a 33-cent dividend, and that's every quarter, and it's on a $33 stock, which means that if you're getting 33 cents every quarter, what is that? You're making approximately 1% every quarter or 4% every year if you own Conagra stocks. You'll also notice, because this stock is one that actually, it's a business that's figured out how to be a business and show a profit every month, you can see that they're not really being affected by the downturn the same way as some of the stocks that are companies that haven't figured it out, right? Because they're going to weather this because they show cash flow every month, which is cash flow ultimately, if you're going to be running a business, is the key to success, not just running your business on hype, right? And so with this Conagra Foods, if you pick a company that is a tried and true company that gives out a dividend, that doesn't seem to be getting affected by the downturn because they're a business that actually is a solid producing business, this is a great one to sell premium on, especially in the covered call writing world, because you own the stock. So an added benefit is if your covering position is a stock, because you'll be able to then capitalize on the dividend. But with all of that said, unless you find this perfect combination of a great run company and all these other things, the dividend winds up being a small adder, and it's kind of more of the frosting on the cake than the actual gains for the long term for the trader who's selling premium. And so I wouldn't focus on dividend per se when I'm setting up finding underlying symbols or deciding which strategy to use. I would just focus on dividend as kind of an extra surprise if you wind up finding a symbol that you want to go ahead and do a covered call on?
I think that was a great question and a great way to look at just utilizing the advantages of investing when there's an overall downturn in the market, and you end up playing it three ways. You get the dividend, you own the stock, and you can sell the calls and collect the premium. So
Yep.
great approach. All
But
right.
it has to be on a stock that's gonna that's kind of a place where people will put their money when the rest of the market is falling to crap.
Sure. And food is one. We all need to eat. So, uh, great pickup. All right. So, we're going to take a break here. And then once we come back, AJ's got a position that he's going to talk about that he's been working. We've got some user picks, some user questions. So, if anybody watching, listening, has something they want AJ to cover, feel free to throw it in the chat. As always, if you want to learn more about AJ, Trading Trainer, the program, we've got a free daily webinar. You can go ahead and grab the link in the chat. We're going to go ahead and take a break. And once we come back, we'll dig into some more opportunities.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So our first ticker of the day.
Wait. I want to talk about, and I'm not ready to do that because I want to talk about these Treasury yields.
Oh, yeah, bonds have been all over the place.
Yeah, check this out. So I've got it up on my screen. I pulled up the Treasury bond yields as of right now. And I want to point out a couple of things. First of all, they're high. They haven't been this high in over a decade. But I also want you to notice that the 2-year Treasury bond is the highest versus, like, you would think the 30-year Treasury bond. And this is that inversion curve yield that people always mention on the financial channels. This is where if you store your money for a shorter amount of time, you'll make more money than if you store it for a longer amount of time, right? So a couple things going on here. This is kind of incentivizing people to only look 2 years in advance versus looking 30 years in advance. And that's a destabilizing force. And the powers that be that control the markets, they don't really like that, right? So they're going to try to restack this up. And this comes back to that whole bond selling thing that the Fed is doing, right? The Fed kind of got themselves into an interesting situation by buying $9 trillion worth of funds, basically printing up $9 trillion and distributing it in the economy, and in return owning these bonds. They're selling those bonds, which means now all of a sudden those bonds are less diluted by Fed money and the rates are going up. And so, couple things to think about here. If you can make 4% just by buying a bond, which is considered risk-free, right? And why would you be investing in something like a more riskier mutual fund, or gosh forbid, stocks, or NFTs, crypto, SPACs? So you kind of can understand now that the Fed is taking these aggressive actions, why there's a lot of money leaving those aggressive kind of investments, because people can make pretty good returns now right in risk-free bonds. And so they're doing that on purpose because they kind of want to see that money. I think that the Fed's got a lot of things in their mind, along with the Treasury Department. They're not just trying to control inflation, even though that's what their big thing is. They're also trying to recalibrate investors, and recalibrate them into different asset classes, because I think they felt like they got a little bit out of control in the last 4 years with some of these new investments that come around. So there's a huge recalibration. I just wanted to point that out. And I think they're doing a lot of work here because they'd like to see the bond yield return to something more stable, where you've got lower interest rates if you hide your money around for just 3 months versus higher interest rates with 30 years. So they're doing that, and it's happening right before our eyes, and a lot of people are missing it. So that's something that you want to pay attention to.
Could you stay on that tab real quick?
Yeah.
Because and we don't usually go international, but I was hearing a lot of noise about the UK and there being something even more serious going on in the bond market.
Well, that's exactly right. In fact, if we come on back to the S&P 500, you'll see exactly that news. So if I come back to a 3-month chart, you'll see that there's been just on Wednesday's tip, there was this pop in price. That was on news that the UK was going to do the opposite of what the Federal Reserve was doing. So the Federal Reserve, as we point out here in this graph here, has been selling bonds. So they had taken on a bunch of bonds and now they're selling them. And all central banks did that during the pandemic. All the central banks were started to print money to keep things flowing, right? Because people, they weren't working. They weren't, so they had to take some serious steps. UK decided to announced that they wanted to start buying bonds again instead of selling them off, to go even further into this printing money thing. And investors love that. They're like, especially investors in risky investments like the stock market. They love the idea of printing money because, again, that devalues the UK bonds, and that makes it more exciting for stocks and even riskier investments to go up. And so all the people who were owning stocks were like, yeah, the UK is going to start printing money again. And so it's going to make our stocks, more valuable because more people are going to come towards buying our stocks because their bonds are not going to be worth anything. But the UK, I mean, it's a big powerhouse, but not as big as the US. And so, as you can see here, that news was short-lived.
Sure. Yeah, I just I didn't really understand, but I think I do now. Won't that hurt the inflation problem, right? Like
Absolutely, but it'll make people happy in the short term. And so I think the UK is trying, they're honestly, the British pound and the euro have not done well. They've got a lot more going on, especially because they're so much closer to that conflict in the Ukraine. And they've taken more aggressive steps than the good old US has in some of the making sure that folks did well during the pandemic. And it's hard to dig out of that hole. It's hard to recover. And so they're trying to make this balance between pissing off their whole population and returning their economy. They're taking a much longer goal. But even today we had here in the States the personal income and expenditures report come out. This is the one that our Fed pays the most attention to. This is the indicator that Ben Bernanke liked, Alan Greenspan liked, all of them like this. And it told the Fed today that they're still missing the target. They're still too high with the personal consumption expenditures price index. They want this thing, instead of 4.9%, they want it at 2. So it's just telling all the investors out there that the Fed is going to keep hammering at it. The Fed is going to keep raising rates. They're going to keep selling bonds until they get this number to 2, and they don't care if they overcorrect, put us into a slight recession. So it makes a lot of stock traders, the traditional stock traders, the people who like to buy and then see their stock go up in price, it makes them kind of antsy.
Yeah, well, that's why working with an expert and a team like over at Trading Trainer, no matter where the market's going, up, down, sideways, reverse, triple wits, all that, there's strategies to make money. And that's the whole point of creating the company, to getting together with all our members every week and identifying opportunities. So this week, this is an opportunity that you guys had already set up in the past, and now you're looking to get out. Is that correct?
Which one is that?
Trip.
My pick of the week. Trip.
Your pick of the week.
My pick of the week.
Ticker symbol TCOM.
Trip.com.
There's so many
this
trades.
Is actually,
so many trades.
Yeah. There it is. So Trip.com, actually, I think Trip.com is somewhat new to us. I don't think we've featured this one before.
Not on the show, no.
This is one that came to my attention. You can see that Trip.com has been going sideways. I'm looking at a 1-year chart right now. It's been going sideways for the most part. And kind of hovering at its lowest, it was down at around $22, $21, and at its highest, it was around $30. But for the last year, it's been in that tighter range. And as I zoom in even further to Trip.com, we can see here that it's kind of at the top of its channel. And the reason why I wanted to highlight this particular candidate is it looks like it's a good symbol to sell premium against. And if I look at the option chain, we want to make sure that there's people buying and selling the options. The October 21 expiration date, I mean, we've got on the call side thousands of open interest. On the put side, we've got hundreds. The bid-ask spread is not too large. It's right in that range that we'd like to see. And then if I also want to look at, say, protective options, maybe the January or the March, the January definitely has liquidity, and it's trading every dollar increment. So there's a lot of flexibility in the options chain to do all sorts of really cool strategies. And the reason why I wanted to highlight it today is because it looks like it's about to identify a top for us, meaning that this would be a great opportunity to get into what we call our covering position. For any time you sell options, you have to have a way to cover it. Your broker doesn't like you to not have positions covered, because that's what led to the 1929 Great Depression, where people, investors were jumping off of buildings. It's because they weren't protecting themselves. So your broker now mandates that you have a way to cover yourself if your trade goes against you. So in the case of covered calls, the best way to cover that is to buy a stock, because the agreement with a covered call is that I will sell you my stock at this price before the expiration date of this contract if you want me to, right? I'm obligated to sell you that stock. So I need to have that stock on hand. And in the case of a covered put, I'm agreeing to buy a stock at a price. And so I need to have the cash on hand. And one of the ways to get that cash is to short some stock. Borrow from your broker some stock shares, sell them, and you got that cash. And so right now, when you have a top, that's a great time to set up your covering position for a put, for selling puts. Another way that you can cover selling puts is by buying puts. So buying different puts. You can either buy different puts that have the same exact expiration date. That's called a vertical spread. You can buy puts that have the same strike price, different expiration date. That's called a horizontal or calendar spread. Or what I like to do is buy a completely different put far out in time, deep in the money. And that's my covering position to then be prepared to sell puts at a later date. So I'm getting a signal on Trip.com to buy some of my covering position puts or short the stock. The stock is cheap enough that I could probably short 100 shares of this stock really easily.
And that's the setup.
That's the setup. And I want to do that. I want to set up that covering position now, because as this stock goes down, that covering position is going to appreciate. But once it stops going down, that's my opportunity to sell a put and make some premium, make some income off of it. So I'm going to be positioned good in both ways, right? I'm going to be positioned with my covering position to make money on trip.com going down, but I'm also going to be set up to create an income stream on trip.com by selling premium.
And what's that time frame look like? 2-3 months?
Well, in order to sell the premium, if history repeats itself, we might be doing it in as little as a week.
In and out?
We'd sell the premium, and then the premium, it looks like, depending if we'd sell it in a week, then that means we'd probably be selling this October 21 option. And so by October 21, we'd be out, and either we'd be cashed out or we'd be ready to do it again.
All right. I like that setup. Trip.com, ticker symbol TCOM. All right. Let's run through a couple of the member picks, member questions. Starting off with a retailer, Nordstrom, ticker symbol JWN. And this is Kristen from New York City, the fashion capital of the world.
Mm-hmm. So we looked at Nordstrom before, and look what happened at earnings. So right at the most recent earnings, Nordstrom must have missed big time because they dropped. But what you can tell about this stock and about the investors interested in this stock is it basically got rid of a few investors, but the remaining investors started to do the same exact pattern again. So you can see that it was trading sideways between $20 and $27, and now it's trading sideways again. And so the investors that remain like this pattern. They like it to go sideways. And you can tell why. Nordstrom is one of those companies that figured out how to cash flow positive. Even though their earnings showed something, they keep giving out a dividend, which means they're making money. They know how to make money. So the investors aren't necessarily, they might get a shock and some of them may flee. But the investors are fine because the company is a tried and true company that tends to make money over time instead of, burn investment dollars on a hope of making money someday in the future. So what I'm thinking about for you is that this symbol has basically recalibrated where support and resistance is. Now, we won't know that for sure until this bottom is found, and I'm not getting an indication yet that a bottom is found, but if we get a bottom somewhere around this $16 to $17 range, let's see if I can draw this thing here. Boop. Yeah. If we find a bottom that matches up with the previous bottom that we found over here, I'd be ready to look at this for a potential premium setup. Again, because I'm worried about the overall market and I'm worried about even some of these companies not being protected on a sell-off, what I would recommend you do is you wait for this bottom to be found, and then it's going to march its way back up. And ideally, it marches its way back up to about $19.75, maybe as high as $20. And then we do the same thing that I want to be doing on that trip.com. We either short shares of Nordstrom or we buy some deep in the money, far out in time put options as our covering position. Those positions will work very well if Nordstrom decides to continue on its downward trail. If it doesn't, if it decides to continue on its sideways trail, it becomes an income position. So we're positioned to profit in either way. In the meantime, while we're waiting for it to go back up the channel, this is a great time for you to do your simulator or paper trading. Practice selling the premium as it goes back up. But I would save our real money trades right now for trades that have our covering position for the downturn.
Awesome. Great pickup. And we're right around the corner for the holiday season. So I imagine, Nordstrom's getting some sales upticks.
The
But
question
good.
is are they going to get as much sales as investors expect?
I feel like that's always the question with any
Yeah.
company that sells anything, right?
And if the Fed has, the Fed is trying to stamp down demand. And so they're going to do whatever they can to kind of calm this Christmas season down, this holiday season down.
Unfortunately, right? It's going to be a sad Christmas.
Mhm.
Thanks, Fed. All right. Thank you very much, Kristen from New York City. Moving on to our next ticker. This is Ernest from Grand Junction, Colorado, is interested in Freeport McMoran, ticker symbol FCX.
The mining company. This is a company that really has a lot of subsidiaries. They're in the mining world. And so, yeah, let's take a look. Positive earnings, again, positive dividends. Again, that's the theme, isn't it? If we look for these companies, they're probably not popular because the popular companies that get a lot of press are the ones that usually aren't making a profit, but they're making a splash. I mean, mining's been around since the beginning of time, pretty much. And so, as you can see, investors are totally content on the positive earnings and the positive dividend. So let's zoom in to what's happening now. So it does look like Freeport's giving us a bottom here. I'm going to say the same thing that I said for those other symbols too. It looks like it's sideways channeling. We have a couple of tests of support and resistance. I want to watch this thing march back up, reverse somewhere between 32 and 34, and that's my signal for setting up my premium trade. In other words, in order to set up a premium trade, an income trade, I need to have a covering position in place. And I want to set up my covering positions, at least moving forward in the short to medium term, as either shorting stocks or buying deep in the money, far out in time put options. And I only want to do that when tops are found. I don't want to do that at bottoms of the sideways channels, at tops. So that's what I do.
Yeah, good setup. I was just checking some fundamentals real quick, but institutional ownership is up 5% just over like the last 2 or 3 months. So in theory, that's safe haven, play.
Exactly. And so that's going to keep this stock exactly where we want it to be because institutions are moving their money here. It's a tried and true company.
All right. Sticking to the theme of metals, Keith from Perth, Australia would like to know your input on GOLD, ticker symbol GOLD, Barrick Gold.
Yeah, so this is mining specifically in precious metals, and this company used to be called Randgold. I've been following this company for years. It's now Barrick Gold. Same thing, dude. It's bottoming in the overall picture of things, which means the gold prices look like they're bottoming. And yeah, I would do the exact same thing. So again, let me identify that earnings works for this company. They're making money. They're giving it back to investors in the form of dividends. So this is going to become a safe haven for folks that are worried about, people are going to start moving their money into, like we talked about earlier in the call, into bonds and into these risk-free stocks like gold and like all of the ones that we've been talking about today. And so this is one of those ones that I don't see, when it forms a bottom, I'm not doubtful at all that bottom will be a tested bottom. And I don't think that it's going to go much higher. I think we're going to see people just kind of stalled and sitting on their hands. So when we get up to wherever we're going to find a top, probably around this $17 mark, I'm going to go ahead and set up my covering position. And then I'm going to happily sell premium every time a bottom is found. In fact, let me take a look at the option chain on gold. Oh, yeah. I mean, it's trading, at least on the near term option, it's trading every 50 cents, which means you can get really granular with your strategies. And look at the open interest, 22,000 open interest. The bid ask spread is 3 pennies. Over here, it's 5 pennies. I mean, this is a nice traded option chain. If I go farther out for my protective options, I've still got plenty of open interest, still trading every dollar. There's so much flexibility in the option chain. I can do all sorts of strategies to profit on pretty much anything that gold does. And so this is another candidate that I would make sure is on my hot list.
Yes, thank you very much, Keith. And so what I want to just pull up real quick is if anybody's watching or listening and likes what AJ's talking about, but doesn't really have the confidence to pull the trigger, we may have something that can help get you across the finish line, and that's AJ's coaching program. Whoops, there we go. AJ's coaching program. So AJ has a team of traders that he's been working with for over a decade now. Maybe not individually, but everyone has the experience to say that. And so AJ's offering a one-on-one coaching program. So if anyone wants that person to turn to ask specific questions, levels, platforms, order sizes, things like that, the coaching program is exactly what you need. So I'm going to go ahead and throw the link into the chat. AJ, how's that going? Because I know we've been talking about it for a couple of weeks now. Are people getting excited? People getting in there?
It's in hot demand. And I'll tell you, the people who are coming to me are people who are seeing their 401k degrade. They're seeing their investment portfolio going down. And so they want like immediate results. They don't want to have to sit down and watch a bunch of videos. They want the fastest way from point A to point B, which is having a one-on-one person work with you. And the beauty of our coaching program is, in addition to the one-on-one coaching person working with you, after you're done with your coaching, we put you into a 6-month trade with us type environment where we're trading together. You're seeing what we're trading. We're seeing what you're trading. We're correcting any sort of mistakes before they happen. And that's how, SIP, we can guarantee that anything you spend on our one-on-one coaching programs, you're going to make back before you're done with the program. And I haven't seen that guarantee anywhere in the field. And there's a reason. It's because we don't just teach you how to do it, but we make you do it with us and build your confidence, build your experience by actually doing this stuff. It's a lot of people think that in active investing is something that you just do, and it's not. It's more like building a skill. If you are just now starting to do Sudoku puzzles, you're going to suck at it at first until you get really good at it. And if you have somebody looking over your shoulder, kind of giving you some of the techniques as you're doing the Sudoku puzzles, you'll get better at it faster. Or if you're, picking up a new sport, like say, for instance, you're picking up swimming. When you first jump in that pool, if you've never been good at swimming before, you're going to suck. Your times are going to be bad. You're probably going to, not feel comfortable. But with experience and with having somebody right there correcting you as you attempt it, and then doing it over and over till you get good at it, that's what it's all about. Active investing is more of a skill than it is something that you can just turn on and off.
Yeah, and so if you want some more information, if you have specific questions, just head on over to that page, scroll down, and schedule an appointment. Work it around your schedule. Someone will get in touch with you. We can break down your strategies, how much money you have in the bank, what you can work with, time commitments, things like that. Because AJ, like you said, there's a lot of material out there. There's a lot of people that can teach it, but you've been doing this for almost 20 years, specifically teaching people how to trade. So if someone is gonna be there to give you an answer, it certainly is you, AJ. So I think the members appreciate it, and that's why we do the show. So let's go ahead and what's the setup for next week? All right, it's the last day of the month, right? It's the last day of the month. We're heading into October. We've been talking down markets. Is that the common thread? Is that what we're looking for the next couple of weeks?
I'm afraid the answer to that question is yes. So you have to make sure you're on the correct side of the equation. You'll be noticing that the common theme of today was I want to set up my covering positions in a way that if the underlying symbol decides to not stay sideways but go down, we'll be in a great position to do that. So keep that in mind. We're always thinking 3 or 4 steps ahead of the market.
All right. Well,
should we look at, I see that somebody typed in a question about Ford. Should we look at Ford really quick?
Because you did mention it earlier as one of those stocks that has weathered their fair share of downturns.
Yeah, absolutely. I mean, again, just looking at earnings, looking at dividends, Ford makes money. Ford is bottoming. And so we want to see that bottom form. I haven't gotten a signal on my fast MACD that a bottom has been formed, but if Ford is bottoming, and it depends on where you are with Ford. If you own Ford stock, if it bottoms, that might be an opportunity for you to buy more stock. If you're not in this trade at all, again, I would stick with our overall theme here, and I would wait for it to bottom and then top. And at the top is where I would do some shorting of Ford, or I would buy some back month puts. But if you're in this long, I mean, this is where, if you've been following our strategy, you have sold some Ford. You have sold some Ford premium, which is probably already expired, and you're now in your protective put. So your protective put is making a fortune. And so I'm getting ready. It looks like when I find a bottom, I'll be selling that protective put at a profit. If it goes even further, I may get stopped out of my Ford stock, and then that protective put's going to continue to profit. So it depends on where you are. But if I was coming into this trade new, I'd wait. I'd do the same thing I suggested on all the other symbols from today.
All right, so we're going to wait and start the month off next week. With that, everyone, I appreciate you guys tuning in. AJ, we appreciate your time. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button.
Helps the algorithms.
Helps the algos. If you have some questions, feel free to drop it in the chat. Feel free to send over a DM. And we'll look forward to catching everybody next week.
Next week, I think there's something special, isn't it? Next week is our 50th show. 50th, 50.
That's crazy. That's a lot of options trades.
I know. I never thought we would last past 5.
Hey, if there's money to be made, we'll show up every week.
That's right. That's right.
All right, folks. Tell your friends to join us next week for the 50th episode. We're gonna throw a party. We'll throw a surprise in there. We don't know what it is yet.
We don't know what it is yet, but we'll do something special.
All right, guys. Thank you. We'll see you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content